TapBank is on a mission to lift and empower our clients with customized financial solutions. My name is Ashley, and today we'll be discussing what asset-based lending is and how TapBank provides credit facilities to our clients and partners. What is asset-based lending? Asset-based lending provides solutions to companies who need cash and have valuable assets. A company can use those assets as collateral to secure a revolving loan for their working capital needs with a lender like TapBank. The two most common assets used for ABL are a company's accounts receivable and their inventory. ABL provides cash flow for clients who are experiencing rapid growth and is a great tool to expedite cash flow. Why someone should consider an ABL versus a traditional line of credit. Often an ABL solution is a good fit for a client who has been asked to leave their previous lender due to that lender being over-collateralized or due to the client's credit score decreasing. ABL is a good option for those businesses needing financial support and cash flow. Clients who may not be approved by a traditional bank for a traditional line of credit may still be able to grow by utilizing an asset-based loan. Common ABL use cases. Businesses that could benefit from ABL include business-to-business models, such as manufacturing, transportation, or other asset-heavy industries. Clients often have the following job titles: Chief Financial Officer, Controller, Director of Finance, CEO, Director of Operations, or President. Our team is equipped and ready to support these roles when they enter a partnership with TapBank. If a customer is unable to qualify and meet the expectations of an ABL loan, a common alternative financing solution would be InvoiceNet. How ABL works. The lender will conduct an independent valuation of the assets and create a borrowing base, which determines the amount of money that can be available to the company. This determines the volume of funds available for the borrowing base and the credit facility limit. A lender will normally advance anywhere from 70 to 95% on accounts receivable, depending on the industry of the business. For inventory, a lender will normally advance 50% of cost of the inventory, or if an actual appraisal has been conducted, they might lend a percentage of the liquidation value of that inventory. The company submits a borrowing base certificate, or a BBC, at least weekly to update the balance of their collateral. Supporting reports are submitted with the BBC to support the change in value. These reports include accounts receivable aging, sales reports, collection report, inventory valuation, and inventory activity report. The goal is to be able to account for the change in collateral from one BBC to the next. With this information, the lender can analyze the performance metrics of the collateral and can determine any potential issues. How a borrowing base works. When an asset-based loan is approved and provided to the client, there will be a credit facility size and a borrowing base size. The borrowing base is within the credit facility. The credit facility is the amount of the credit line approved for usage. The borrowing base is the amount of the funds available. The borrowing base is dependent upon the amount of assets the company currently holds. Think of a credit facility like a sink. The sink itself is the credit line, and within that is the water or the borrowing base filled with assets. Please refer to this image to understand how a borrowing base works. Imagine that the sink is the credit facility limit. The water is the assets the client currently has. The borrowing base is the amount of the accumulated assets or the water being held in the sink. The amount of the funds available is equal to the borrowing base. The size of the credit facility is equal to the size of the sink. How a revolving line of credit works. A revolving line of credit is like borrowing books from the library. You take out what you need, but you must return them before you can borrow more. Like credit card limits, an ABL credit facility has a limit known as the borrowing base. A revolving line of credit is a financial arrangement that allows clients to pool, often referred to as fund. The limit does not adjust to the borrower's usage and is maintained after the credit is repaid. This allows the client to maintain their credit facility after paying back the funds used. ABL Covenant Overview. Because the company's financial health is so important to the lender, there are certain financial performance requirements. This is called a financial covenant. There are many types of financial covenants, but usually the lender wants to make sure that the company has sufficient cash flow and liquidity and is not over-leveraged. Every month, the company will send a lender financial statements, including the balance sheet and income statement. The company will send in their own calculation of the financial covenant, and the relationship manager will compare their calculation to make sure they match. There are additional reports that are required every month, including a compliance certificate, a copy of a BBC signed by company executive, month-end AR, AP aging reports, and an inventory valuation report. How TapBank supports our ABL clients. Every ABL client has a dedicated relationship manager. the role of the relationship manager is central to building and maintaining strong, long-term relationships with our clients. ARM's primary responsibility are to help support the client's financial operations and to add insight that can help them grow. They help with client needs, analyze account trends, and provide awareness of complementing bank products that could support the business needs.